All right, so what I want to do now is go through the second of the extra problems I have available. And there is a key available, but keys are that static photo op that we don't get a lot of context around. So I wanted to make a video going over it in case, my steps in the key weren't making a lot of sense. If you haven't yet and you're watching this video, I highly suggest that you work and or watch the video I have for example number 4 from the chapter 8 problems because this is the same idea, except I formatted the data differently. Instead of giving you a purchase sales log and telling you about the percent discounts and all of that, what I provide instead is the table that results from all that information and not necessarily the complete table. So, if it is to be presented on the exam, this is how I would present it. I would definitely make this presentation over something like this because this involves a lot of tedious calculations that I'm not quite interested in seeing if you can, tap things into your calculator appropriately. I'd rather see you understand the application that of that math. So I do have a few kind of footers or hints in here, like these purchase discounts are net of returns, and the freight is net of returns. And so what that's telling me is these figures are calculated only with the units I kept. So they represent the full amount of the units that were kept. So this is Bane Corp, and Bane uses the gross method of accounting for purchase discounts. Um, all right, I'll talk a little bit about what this table would look like under the perpetual method, all of which are taken in full. And this is that guaranteed part where I'm telling you no one misses a discount here. So every time they're paying within the discount terms, right? They're getting the discount that was offered them. All purchases are made on credit terms, which again is a constant rule that I have on my inventory problems. Any return items are reimbursed freight charges. Again, another consistent rule. And freight is paid in cash, my final consistent rule. Okay. Um, And finally, we also have the number of units in my ending inventory. So, a couple of things first, right? Purchases are always recorded with total units. So this purchases amount is never net of returns. And if we're using a gross method, it's always full price. So this is units purchased at the gross price or full price. And yeah, that's just a simple calculation of 1,000 times $78, 400 units times $79. So that's what this purchases account represents. Because we only get the discount, right? When do we record purchase discounts? Well, first, we record purchase discounts only under the gross method because we record a purchase discount when I pay within the discount date, right? Within the terms of the discount. If I pay before the discount period ends, I get the discount. If I'm paying for something under a credit term relationship, that indicates I did not return it. So I only get the discount when I pay, and I'm not going to pay for units I return. So this number disc for purchase discounts should always be net of returns. Purchase returns, right? This is simply the number of units I returned times the under the gross method, the full dollar value. And then finally, freight. If I'm reimbursed freight charges for returns, then I'm only going to have freight for the units I kept. So this is the amount of freight times the units I kept. We could figure out a lot of things that I don't ask for. And honestly, as a student, that's something, something that I did when even when the professor didn't ask for something, I would try to, give it a calculation, especially if he told me that you could do this stuff. But yeah, like for example, the freight in this 465, well, if that's net of returns, I'm trying to figure out what the number of units I kept because I'm going to have units kept here. Well, I know I ordered 1,000 units total, but to get to how many I kept, then I'm going to have to do a little math. And the way I'm going to figure that out is, well, if I could take my purchase returns number, 5,460, and then understanding that I value my purchase returns under the gross method at the full price. And if I divide that by 78, it should be like 60 something. Ooh, almost a little off. Comes to 70 units returned. So of the 1,000 total, that means that my units kept were 930,000 minus 70. And then if I divide 465 by that, damn it, I keep stupid phone calculator. It's the worst for fat thumbing things. Should be like, yeah, 50 cents. Could have done it in my head, damn it. As I've aged, I've grown less reliant on my mental calculator. So that's my freight charge, 50 cents per unit. I can figure out the percent discount because this is the discount I get per unit returned. Um, you could go through and just say, all right, well, if I, not per unit return, per kept units, so that would be $1,450.80 divided by, again, 930. That's the units I kept and paid for. That comes out to a discount, $1.56 per unit. And since that's per unit, just compare that to the main price is $78. And you can calculate how much, what percent this is, which should be 2%. Yep. Okay. So you can figure out these things and work backwards. Just I recommend you do it a little bit, get a little conversant with these tables and see how it works. The other thing I wanted to talk about in terms of just a teaching point with this table that doesn't necessarily correspond to any of the questions I ask, which I know you're like, oh, and then your next question is this going to be on the test? And the answer is it could be. Um, what would look different if I had the net method? Well, under the net method, my purchases are going to be, remember, we, under the net method, we are saying, okay, we're going to record every transaction as if I'm taking a discount. So under the net method, we would put the discount in purchases. It would be net of all discounts. So instead of being 78,000 under this heading of purchases for the purchase I made on April 5th, I would take the 78,000, which is my full price, and then Well, if that's full price and I have a 2% discount on this layer, then that means that 98% would reflect the net of discount price. Oops. 78,000 times 0.98, which would be 76,440. Okay. That would be now under the purchases for the net method. We wouldn't have a purchase discounts account because all the discounts being taken out of this. And then the purchase returns would also be affected by the discount because instead of valuing my returns at the gross price per unit, I would value them at the net of discount price per unit. And so in this example, we said that we had 70 units returned. It would be the 78 units times the full price amount times the net of discount amount, which instead of 5,460 would be 5,350 and 80 cents. So just to understand, what kind of the differences would look like, I might throw up an example where I do this, yet another example. I know you're probably getting tired of doing problems, but that's the way to success in accounting, where it changes because we're doing net method instead of gross method. Anyway, so that's some of the interesting parts of that table. Kind of want you to get used to and comfortable working with those numbers because it really tells you a lot about how much you understand of the process. So let's go ahead and just start working through the things I do ask. First thing is, I want LIFO perpetual, right? Now, it's not the same as the purchase sales log, but I do still have inserted here the number of sold units at different times. Um, so we need to record them under LIFO perpetual, which will involve us calculating a few things. We sold 1,200 units. We're doing a perpetual system. So remember, when we're doing perpetual system, we kind of, we have to make that record on April 22nd. So don't suffer from that foresight bias where you're like, oh, but wait, there's some here, there's some here. These were the most recent. No, no, no. We're on 422. So the only things we know that we've done are the purchase on 415, the purchase on 405, and the beginning inventory. That's all I'm going to focus on. So for those 1,200 units on 422, I know I sold 1,200 units. I know that this would affect my accounts receivable and my sales revenue. And again, I'm not asking you to put numbers here necessarily. I didn't give you the sale price, but just to remind ourselves that we only make perpetual, I'm sorry, for every sale, we have to stop and make a cost of goods sold inventory adjustment under the perpetual system. So I make this sale on 422. I sold 1,200 units. Now I need to figure out what the cost of goods sold and inventory adjustments are from the sale I made. So let's price those units. If I sold 1,200, I'm using last in, first out. Those are the most recent, the 415 purchase. That won't be enough, so I'm going to have to dig into the 405 purchase. But also remember, these are the total number of units purchased, not the units I kept. So that's one thing that you might have to first calculate or kind of put out there as something that, in this case, how many units did I keep? Well, we already figured that out for 405. We divided purchase returns by the gross price. We found out that we returned 70. And so we had 930 that were kept. And then here we have 2,765 in purchase returns. These would be based on the gross price because we're using the gross method. So if I divide that by 79, the gross price, I get 35 units returned. 35 units returned from the 400 gets me 365 units kept. So now I have a more accurate representation of when I move to the next layer. So of the 1,200 units, 365 of them are at that price point on April 15th. And then the remaining amount that I need to get up to 1,200, right? 1,200 minus 365 would give me, I need 835. If I did the math in my head right. Yeah, that looks correct. And that's from the April 5th purchase. So these are the units I'm pulling to come up with the total 1,200 that I'm looking for from these two layers under LIFO, right? Under FIFO, if this were a FIFO perpetual, I'd have the 1,200. I would start from the top and then go down because this is my oldest stuff and this is my next oldest stuff. All right. Now I need a price point. Well, the price point is not that hard if you remember how to calculate it, right? So we have the units kept, that's going to be part of it, but we also need to know what the total value of each of these is in terms of net purchases, also known as inventory net. So how much would my overall inventory have been affected? And remember, we do this in terms of adjunct, contra, contra, adjunct. That means I add, subtract, add. So I'm just going across the row and combining those four numbers to give me net purchases, which is equal to the amount that the inventory account would have been changed by given all four of these items. So the total of this inventory layer is 71,554.20. And then I'm going to do it to this layer, to that purchase layer as well. 31,600 minus 576.70 minus 2,765 plus 292. 28,550 and 30 cents. All right, so that's just the total value that would have been debited to inventory from these four transactions and those four transactions respectively. All right, well, that doesn't help me with the price per unit. Now, all things equal, not all things equal, but since I'm wiping out an entire row here with the 365, I can just take that total value. Or you could take 28,550.30, divide it by 365, multiply it by 365, which will in the end get you the same thing. Because this would be its price per unit, which would come out to, well, I sold the whole layer, and this price does not include any returns or reimbursed freight. So I can just take that number and drop it right there. Right. Now this one, we did not sell through all 930. I'm only going to take 835 of those. I do have to determine the price per unit. 71,554 and 20 cents divided by 930 is going to give me that price per unit. Which is $76.94. That's the per unit. And multiply that by 835. I get 64,244.90. Okay, so that's each layer, but I'm looking for the total amount because I sold all 1,200. 92,795.20. And cost of goods sold reduces net income. The credit to inventory reduces assets. That would be for the April 22nd sale. And then I just repeat that same process for June 25th, right? One thing I do want to really message and make clarion clear, right? That if you give me this work, I can be very gentle when grading. For example, you don't subtract off the returns. So you just take 400 from this layer, but you got the math right otherwise. I can take off fewer points than if you just give me a wrong answer here, or definitely a wrong answer here. What I tend to do is allocate a number of points within this calculation. So, for example, pulling the correct units first. So, for example, we're doing LIFO. You need to grab the April 15th layers first, not the beginning inventory. Okay, well, if you grab those first, that is an indication you know something. Determining how many units and understanding that you can't include returned units, that counts for something. Figuring out that you need to get the total value of this row, I'm sorry, this row, and divide it by the units kept, that's an indication of more knowledge. And so the more you break this out and indicate, okay, I'm pulling from the 415 layer, I'm getting this many units from it, I'm taking this price point and dividing it by this many units that I believe were kept, and that's how I'm getting this amount. That's when I can give you a lot of credit and still give you credit despite little mistakes you might make, right? So make sure just show me. I know it's painful in the means that we have to use it. We have freaking AI that can figure out almost anything now, it seems like, and yet we still have a very crappy processor within our exam blackboard space, and hopefully one day that'll get better. Who knows? But anyway, um, yeah. So make sure you show me your work and make sure you know that, for example, you would have to give me two entries on this one because it's not just the 422 entry, but also the 625 entry. And I want to leave that one undone for now. It is on the key, of course, but I just, don't want to, I want to kind of let you get that piece down. It will just be the same process, but applied to 900 units based on what was returned here and here. And after you get that, hey, you gave me the journal entries to record cost of goods sold. We're good for this part of the project. So now the second piece asks for a dated journal entry for the cost of goods sold if we use average cost periodic method. So the average cost, remember, we're looking at everything, all of all of the data we have for the entire month. We haven't done an average cost problem yet, but it's when it's done in a periodic way, it's actually one of the easiest. And the way we do it is by looking at what my goods available for sale is in terms of a total dollar value. So the total dollar value of goods available for sale divided by the total units kept that are available for sale. So we do have to make some additional calculations on from the table. We have the units that were kept here and here. We need to determine them for these two rows. So 12,000, 1230 is the dollar value returns, but that's measured at $82 per because we're using gross. So we use the full price. That 1230 divided by 82 tells me that 15 units were returned. So that means that 460 were kept. And 1479 divided by 87 tells me that 17 were returned when I take this number and divide it by 87. And if 17 were returned, we bought 500 originally, so we have 483 remaining. Now, remember, these aren't the only units I have kept that are available for sale, but also these come into play too, the beginning units. So I'd have to also consider those in my average cost calculation. So taking all of those units kept, beginning at 720 and adding down the column, 930, 365, 460, 483, gives me a total of 2,958 units. All right. Now, I got the dollar value of goods available for sale for these two purchase layers. I don't have it for these two, so I'm going to do that real quick. 38,950, subtract 754.40, subtracting 1230, and then adding 414. This is 37,379.60. This is when I wish I had Excel, or when I wish you guys could use Excel on tests without violating any huge concerns about it, test integrity. This is 41,633.58. All right, and again, just to remind you, what I'm doing is just figuring out my net purchases. And to get goods available for sale, I also have to consider my beginning inventory. So those 720 that were purchased at a price of 75 per are 54,000. Okay, now we need to add all these up. So that comes up to 233,117 and 68 cents. Lot of goods available for sale. 233, 117, 68. So we got dollars over units. And of course, that will translate to a price per unit for me of, and I round it, $78.81 rounded. You don't have to ever worry about rounding on exams because if you show me your work, that's really what I look at. Okay. Then I make sure you use that rounded, whatever you rounded, as long as I usually round to the nearest cent if you're going to round. And as long as you're applying that number appropriately, you're good to go. Okay. So that seemed like a lot, and there is a lot of number crunching involved in that. But now that we have the price per unit, Remember, when we're doing the periodic, and two, give you can give it a sniff test a little bit if you have the prices per unit. We have at least one of those, right? $76. You can go through and figure out, is this a reasonable price per unit? Right? Look at your prior work because it should be something that makes sense if we take this divided by that, this divided by that, this divided by that, this divided by that, get the price per unit of all these items. It should be a weighted average price of those things, just to give you a bit of a sniff test to determine whether your average cost is way off. But remember now, this is the price we're going to assign to every single unit regardless, right? That's what the average cost method tells us to do. So if we're making the periodic entry, remember the first thing is we calculate ending inventory. And we're going to do that by just taking the 848 units that were counted, the physical inventory count, and multiply it by the amount I got per unit. So 78, 81 cents times 848 is 66,830 and 88 cents. That's my ending inventory. Number two is to calculate COGS. And we do that with the inventory equation. I'm going to just start at gas minus ending inventory gives me COGS. Well, what do you know? We already know that's gas. So 233,117.68 minus the cost of goods sold gives me, sorry, not minus the cost of goods sold, minus the ending inventory that I calculated in step one gives me 166,286 and 80 cents. Now I start building my entry. And remembering that, I got to close those contra and adjunct accounts. So I credit purchases because it is an adjunct asset, and freight is the other adjunct asset. So those two get credits to close them. And then I debit my credit-based accounts. So purchase returns is a credit-based account. Purchase discounts, credit-based account. Those are my contras, and they close with debits because they have credits as their normal balance. Notice the total row isn't here, and so you do have to total those columns. Total these four amounts for purchases, those four for discounts, returns, and freight, and then you have the amounts that should slide in here. And again, I don't feel like it's necessary for me to do that, but you can do that on your own or see the key. Basically, we're just totaling the columns from the table. Remember that after we're done, we're going to have all four of these closed. They're going to be zero. Cost of goods sold will be a number, but it gets closed in our official closing entries at the end of the period, that step from the accounting cycle. Then only thing we're going to have left is ending inventory, which will be next period's beginning inventory. That means that there are no purchases, discounts, returns, or freight ever associated with beginning inventory because these accounts have all been zeroed out when we recorded this COGS entry. Okay. Their values have been imputed into that value of beginning inventory. The third thing, that's what we did, is make sure you close the contra adjunct accounts. And then the fourth thing is to adjust inventory. So make a little T account. I know that if I'm doing the periodic system, inventory did not change over time. In fact, this 54,000 that was the 720 times 75 is my beginning balance in that account. What I want the ending balance to be, I calculated here, 66,830 and 88 cents. That should all be on the debit side. Kind of ran out of room. And if you're just doing a one entry, just the difference between those two suggests I need to debit this account in order to adjust it up to the appropriate ending balance. So 66, 830, 88 minus 54,000 is a $12,830.88 adjustment that we would make by debiting my inventory account by that amount. That's what puts that, I'm sorry, the other way around. This entry and the journal entry puts that into my T account, which gets me the correct ending balance. Very similar to what we did with bad debt expense, but just doing it with a different account. As I mentioned, if you understand that accounting processes are just variations on a theme, this is a technique we use a lot in different transactions and adjusting for different transactions. We would also, of course, I forgot to include in this the most important thing. The reason we're doing this whole entry is to have COGS, which we calculated with the periodic system, right? We know that this COGS includes some shrinkage. But that's the amount that would be recorded. I'm sorry, 280. Oops, I started taking two different numbers there. 166, sorry, 286. Oh, did I flub that? No, I got that right. No, okay, I didn't. Sorry. I was very worried I took the wrong number there for a second. All right. On a different part of the problem. Yeah. So this is our this is our COGS, not our ending inventory. This is our COGS. This is what we would debit for COGS. And then total up the columns for the others, you got the full entry. Let's talk about the shrinkage entry. Remember, shrinkage is only detectable using a perpetual method. So we need to compare how many units we had in our ending inventory versus how many we should have had. We do have the total number of units that were kept, 2,958. So all we need to do, right, is subtract what we sold from this amount to determine how much we should have. So we counted 848 and we should have 2,958 minus the amounts I sold, which would be 2,100, which comes out to 858 These are the number of units I should have on hand. That's the number I counted. 10 units are missing. So remember, shrinkage can only be handled under the perpetual system, and I'm going to assign the shrinkage involved with these units by using the perpetual cost flow information. So life of perpetual cost flow, those 10 units. If you work the rest of this first one and determine what units you're taking for the sale at June 25th, you'll realize, okay, I sold 900 units. All of those are gone, but this will still have some left over because I would only need 417 from this layer after taking 483 from this layer first under this piece, when I'm assigning the cost that I sold on 625. So I could not chalk my shrinkage up to this price point on June 10th because all those have been sold. But I can for this price point here. So that's the price point I would use, 37,379.60 divided by the units I kept, 460. That comes out to $81 and 26 cents per unit. That's the total amount of shrinkage I would have. And you can record it as loss on shrink. Or as I mentioned, some companies just debit cost of goods sold directly. They need to include that in their footnotes if they do that. But it's always and most definitely a credit to inventory because our inventory account is currently overstated since it wasn't taking into account the fact that we had some lost units. So that would be the entry to record shrinkage, the calculations to record shrinkage. Again, this is one of those moments when showing me your work can get you points instead of just telling me, oh, the shrinkage is $1,200, but none of that is there. And I'm just not sure how the hell you got it. The final piece, determine the amount by which Bane overstated COGS. Right. So what it's asking is when we wrote this COGS out, I said, this includes shrinkage, right? Well, since we know from our, you calculating how many units should have been there that weren't there, the 10, it's pretty easy to determine, okay, if this is 10 unit, if this includes 10 units that were not sold, but just stolen, then how much in terms of dollars did we overstate this? Well, because every single unit in a average cost problem or average cost flow assumption is 78.81, that's as easy as taking 78.81, multiplying it by $10. I'm sorry, not $10, 10 units. 78.81 is the dollars. It was overstated by $788.10 because I had assumed by the periodic method that these units were sold rather than lost, stolen, ruined. And I got that price point here and I got the unit shrinkage there. So that is how to work one of these problems. One of the other problems I would definitely encourage you to work is example number 5 from chapter 8. And same process, same stuff. It includes purchase discounts, purchase returns, freight. Um, it has purchase and sales, and it just does it with another format. Instead of a data table, instead of a purchase sales log, it just provides a lot of paragraphs of information. So, um, three different formats, same knowledge tested in each one. Really, this is, you got to get this piece down and understand it, and then we can move. And then chapter 9 adds on pretty seamlessly after that.